You may start.
Okay. Hi, everyone. Good morning, good afternoon, good evening, depending on which part of the world you're joining from. It's my pleasure to be back here in Doha, Qatar, virtually once again with our Qatar partners, Al-Mashura. This time to discuss about digital financial inclusion. We've run a series of webinars throughout this year, and I can't think of a better way to end the year than with the topic of digital financial inclusion. And to discuss this with me, I have four amazing panelists from four different parts of the world. More importantly, four very passionate evangelists when it comes to inclusion in their own ways. They are championing it in their respective countries, in their respective regions, and in their respective domains and areas of expertise. So without further ado, it's my pleasure to welcome and invite all our four panelists today. I'll just go in alphabetical order so that we are completely aligned, and then I will request each of them to do a very short 30-second to 1 minute introduction about themselves. We start with Professor Hongyi Chen from Zhejiang University, China, which is based in Hangzhou, the home state of Alibaba, no other than Alibaba. After Professor Hongyi, we are delighted to have my old colleague and friend from Citibank Philippines days. I'm seeing him after almost a decade, so it's lovely to see him again, Mickey Uhiko from Union Digital Philippines. After Mickey, it's my pleasure to welcome another female champion of financial inclusion from the MENA region, Noha. I don't know, Noha, if you're on video or not, but if you can put yourself on video, please. She's the Secretary General of the Fintech Association of Egypt. And finally, last but not the least, we have Professor Olayinka David West, another well-known proponent and expert on financial inclusion from Nigeria. So we'll go in that order, and I'll start with Professor Hongyi. Kindly, if you may want to introduce yourself, and then we'll go in order.
Sure. Thank you very much, Malik. Hello, everyone. My name is Hongyi Chen, and I'm Assistant Dean at Zhejiang University International Business School. So as Malik briefly mentioned, our university is located in Zhejiang Province, which is the headquarters where Alibaba is located and where Ant Financial is located. So today I'm very excited to share some of my observation here and also to learn like the global perspective from the distinguished panelists. Thank you.
Mickey, we'll go next with you, followed by Noha, and then Professor Yinka.
Sure. Can you guys clearly hear me? Hi, yes, everyone. Good morning, good afternoon, good evening. I'm Mickey Uhiko. I'm the Chief Innovation Officer of Union Digital. My background is in finance, business development, advertising, and telco. And as mentioned by Malik, we were former colleagues a few decades ago, or a decade ago. Union Digital is one of the 6 institutions granted the digital banking license by the Bangko Sentral of the Philippines as part of its thrust to promote financial inclusion in digital payments. And thus, I'm very much excited to be part of this panel.
Noha, if you may go next, please.
Thank you very much, Malik. Well, Noha Shaker, the founder and Secretary General of the Egyptian Fintech Association, and the co-founder and vice president of the Africa Fintech Network. I'm also a Gobi investment partner, and I have another engagement with another not-for-profit, FSD Africa, where I lead their digital innovation, working on the area of mainly resilience associated with financial inclusion. Thank you very much for having me.
Thank you, Noha. Always a pleasure. And now we'll go over to you, Professor Yinka.
Hello, everyone. My name is Olayinka David West. I'm the Associate Dean and Professor of Information Systems at Lagos Business School in Nigeria, Africa's most populous and largest economy. And I'm glad to be here to share thoughts and ideas with colleagues from around the world. Thank you.
Thank you, Yinka. And we started with an academic, we ended with an academic. So let me start the discussion with these two academics from two different regions and continents. The topic of today's panel is the importance of financial inclusion, and all of us speak at conferences regularly, including events which discuss financial inclusion. As academics, as experts, as evangelists, as theorists, in your view, why does inclusion even matter? And given that we've been discussing about it so much, right from World Bank studies to UNCDF studies, etc., why is it that after all these years and decades, banks haven't been able to solve for it as yet? And this question is to both our academics, Professor Hangi and Professor Yinka. We'll start with you, Professor Yinka.
Okay, Hangi had already unmuted, so I'll beat you to it then. Okay, but generally, I think the real issue is that we've seen this challenge persist for many years, and why does it matter? I think that when you think about every single person on the planet, everyone has a right to different types of services that are affordable and meet their needs. So when you look at a continent like Africa, where there's lower economic ability in general, and you ask yourselves, how do the poorer people, or those at the bottom of the pyramid, how do they thrive? How do they survive? How do we ensure that we protect them as well from predatory practices? And so when you look at that's why financial inclusion matters, because everybody needs that societal protection. And I think it's a fundamental right for any government or anybody to say, oh, we want to include people. So when you think about why should they be included, they need to be included because they also have families. They also they have needs and wants, and they need to be able to address those needs and wants and aspirations without begging. So how do you give people that sense of dignity if they don't even have the right types of services to meet their needs and objectives? So for me, it's a social imperative for every single nation to ensure that we include our citizens, and they have that sense of dignity, that sense of being across what they do. Then the second question, Malik, on why haven't the banks been able to do this? This is now the intersection between socialism and capitalism, right? And so the banks are looking at, how do I drive my own business for my shareholders in that sense? And financial inclusion is difficult because a lot of the people who have no access or minimal access to services are in remote locations or remote areas. So how do you distribute to them in a manner that also makes business sense and from the bank's perspectives? The second issue that we see on our continent is that people have different needs and services. If we don't even know who these people are because they're undocumented, they work in the shadow economy, we don't even have any idea to get the feedback and build products and services that meet their needs and aspirations. The third part is that it's a less profitable business, right? And because it's less profitable, you need to be working at scale. So if you're not working at scale and you're working in a limited fashion, then you ask yourself, does the business case really make sense? But then again, there are different dynamics around building scale and getting to profitability, which we'll talk about much later. So I'll let Professor Chen do the rest. Thank you.
Okay, thank you very much. And I think Professor Yinka already covered very comprehensive. So here I would like to maybe pick up two different cases to supplement what she has said just right now. So the first one, I think, is because of the physical limitation. So if you think about like the country such as Indonesia, Indonesia, as we know, is like a country with more than 10,000 islands. So traditionally, even that the bank, they want to cover those people who need the financial service, but it's impossible for us to imagine a bank need to open more than 10,000 branch in a country. So thanks to the technology, it makes financial inclusion possible because of the adoption of internet and also adoption of mobile phone. As we can see, Indonesia is also one of the leading country in terms of fintech. And another issue is about the cost. So for example, if we talk about the financial inclusion, as Professor Oleinka just mentioned, maybe sometimes it's also not profitable if we imagine a microfinance. But again, thanks to the technology, we can save like the cost because of the human resource, because of the time that we need to review the lending proposal each by each. And nowadays, if we look at how many countries like China and financial, how they adopt artificial intelligence to review the loan application, that saves a lot of time, and that also saves a lot of money. So I think this is really a good time for us to consider how technology can help for the financial inclusion.
Thank you, Professor Hongi. And we've had some important points being raised here. You spoke about Indonesia, and I'll come to you, Mickey, shortly on that, because Philippines also is an archipelago, 7,000 plus islands. So, connectivity, there are so many islands where you can only reach by boat as the last mile, not even forget airport, not even a road connectivity or a rail connectivity is there. And then there is, of course, the telco connectivity issue. So you raised an important point, Professor Hongi, and the other important point you raised, Professor Yinka, is about the business of scale and profitability. And I want to go and touch upon these points slightly later in our discussion, because I want to allude to that landmark book or that theory, since you both are academics, by Professor C.K. Prahlad. I'm sure we've all read about it, prosperity at the bottom of the pyramid. So why is it that at an aggregate level, we have a leading thinker and academic say there is money to be made in that segment? It's not all about charity, and yet banks have somehow not found that segment to be profitable at all. But I'll come to that shortly. I'll now go to Noha, and I'll continue with you, Professor Yinka, as well. So I want one industry perspective and one academic rigorous perspective. And I'm going back to the first principles. We've seen study after study, and every year, depending on which study you pick up or which data you reference to, World Bank, etc., comes up with its own report. ADB comes up with its own report. Anywhere from 1.2 to 1.4 billion adults are still unbanked or underbanked. And we discuss this, as I said, at conference after conference. We keep talking about financial inclusion. But my question is, in your view, how do we even really define in a very sharp and robust manner inclusion, especially financial inclusion? And what do I mean by that? Why do I ask this question? We think it's so apparent, but depending on whom you talk to, or depending on which source you look at, there are many ideas floating around on this. Is it about bank account? And if you look at the examples from India, you hear about the Jan Dhan bank account being opened for hundreds of millions of customers. And then is that enough? Does that mean that most of the population in India is now included? Or is it about having a transaction account and wallets? And that's something, Mickey, you can speak about later, running a digital bank. Or is it about getting embedded and enabled into the larger financial ecosystem, as you mentioned earlier, Professor Yinka? So I want to understand in a little more detail on how do you even define inclusion. We'll start with you, Noha, and then Professor Yinka, please add your perspectives as well.
Thank you very much for raising that question, because the answer is going to shed the light on the core issue that is there. Financial inclusion is not and cannot be measured by the number of people who have bank accounts or have wallets. The definition of financial inclusion is all about availability and equality of opportunity. So the availability of suitable financial services and the equality of the opportunities to access those financial services for individuals at the bottom of the pyramid and businesses, especially the smaller ones. So individuals and businesses must be able to access appropriate, affordable, and timely financial products and services. Not just accounts, not just transaction payments and the like, but that should include loans, access to funding, that should include availability of forms of investment like equity, and of course, insurance products to guarantee and improve their resilience once financial inclusion has helped them to actually get out of poverty.
Thank you, Noha. And before I go to Professor Yinka, I just want to share, some of you know this about me, but among the various hats I wear in the fintech space, one of them is that of an academic and a professor as well. I teach fintech. So I love to, talk in terms of frameworks, models, theories, and sometimes acronyms as well. So I just picked up an acronym from what Noha said, and I call it the art of financial inclusion: affordable, relevant, and timely. So thank you for helping us learn or frame a new concept. With that, over to you, Professor Yinka.
Okay, great. I would add to what Noha just said, and I think it's really about 4 dimensions. There's the access, there's the access to affordable financial services, but there's also the utilization, because there's no point in having a bank account that you can't use to meet your own needs. And then the other dimension is a dimension which is called the impact dimension. And so what? So what does this do for your life? Does it add any value to your life? Does it give you access to savings products? Does it improve the value of your life? Can you get credit for your business, et cetera, et cetera? Because a lot of the people that we're also looking at in the sector work in the informal economy, right? So they're informal micro mom and pop stores as well. So how do we ensure that they're better served, they have access to credit, they can pay their suppliers? And this is where, while the entry point is a bank account, like Noha said, it's also access to savings and credits and other banking related services. Then there's the insurance and protection services, as well as the short-term, as well long-term investment services like pensions, for example. So I think that every country defines financial inclusion according to their own needs, but the mantra is similar. And I think another area I want us to be mindful about is, as you go higher up the consumer financial services pyramid, we begin to realize that exclusion exists across different products. So when you go to investment products or interest products and people can't compute what's the interest, so how do we continually educate people around financial services, financial literacy, et cetera, et cetera? So it's a multitude of things. Thank you.
Thank you, Yinka. And you mentioned something important, that it's not just about access and opportunity, but even utilization. And we'll come to that shortly about the, not just the supply side. I think it's great that we are really peeling the onion on this one, because a lot of conferences and a lot of panels probably just look at the supply side and, the plethora of choices, but very few look at the demand side of things and the last mile connectivity issue, etc. And that's why we've tried to put together quite a balanced panel here, which also has perspectives from the developing world. And on that, I want to come to you, Mickey, and also Professor Chen again. We heard about the archipelago issue, and Philippines is a classic case, 7,000 plus islands. Union Bank has actually been a leader of leveraging technology for inclusion. And there is a classic project called Project I2I, which Union Bank had launched about 2 years ago, using blockchain to take banking even to the remotest islands, where even, as I said, the last mile connectivity can only happen by boat. On one hand, that is there. On the other hand, Professor Chen, I think everybody knows about the China story of how China has really, transformed the inclusion landscape. And it has really, at a multifaceted level, we've seen how hundreds of millions of people have been lifted out of poverty. But if we just zero in on the financial inclusion aspect of it, we've seen how a billion people now use alternative finance tools, wallets, etc. Or even when we look at WeChat, something which is a chat or a messenger tool has now become the centerpiece of their daily life and economic activity. So I would love both of you to share some tangible examples from your countries. Tell us what the situation was 5 years back, and from there to now, what have been perhaps the top 2 or 3 drivers or changes which have enabled this change? We'll start with you, Mickey, and then we'll come to Professor Chen.
Sure. Well, technology is a great enabler and a great equalizer if used properly, right? But 2 years ago, well, when the pandemic started, it turned our worlds upside down, right? A lot of people lost their jobs. And thus we saw the rise of the micro entrepreneurs and micro SMEs in the Philippines, enterprising Filipinos just paving the way. And
Mickey, sorry to interject, but if I may request you, can you speak a little louder? If you're, or
sorry.
maybe come closer. Yeah, that's better.
Can you hear me now?
Better.
Sorry. So, where was I? Sorry. A lot of people lost their jobs because of the pandemic. And we saw the rise of SMEs, right? Or micro SMEs, an informal way of living, right? We call them in Tagalog, mga dumidiskarte, which is enterprising in Filipino. All of these informal sellers were enabled by technology. They were selling in Viber communities and Facebook communities, and it was all happening through digital payments. Digital payments pre-pandemic was at 14% here in the Philippines. It grew to 20%, and it continues to grow. And even our very progressive Bangko Sentral ng Pilipinas has a roadmap to transform the Philippines from a cash-heavy society into a cash-light society by 2023. I'll stop there.
Thank you, Mickey. So from the Philippines to China, Professor Chen.
Yes. Okay, sure. So I think for those of you who have traveled to China, I think in the last 2-3 years, you should have the strong impression. Particularly, I think almost every single vendor or single store, they mostly accept the QR code payment, no matter it is by Alipay or no matter it is by WeChat Pay. But the one thing I wanted to highlight here is that although that we have a lot of the adoption in terms of digital payment, which is quite helpful for the financial inclusion. But on the other hand, we also have the concerns on the monopoly of both WeChat Pay and Alipay. So sometimes we have the improvement on the digital finance, and which is helpful for financial inclusion. But on the other hand, we also have the strong concerns, particularly for those big tech company, their monopoly issue. So if you look at the white paper published by the Central Bank of China, People's Bank of China, you can see one of the reasons why China adopt central bank digital currency is because the monopoly issue led by two of the big tech company here. So I think that is some of the benefit led by both of them, but we also need to think about the potential issue.
Thank you, Professor Chen. And I'm taking a slight detour now, but I have to, since you mentioned about the ECNY or the digital yuan, which is the CBDC, the central bank digital currency launched by the People's Bank of China. I can't resist myself from going to Professor Yinka, and she's smiling already. She can sense that. We were together at an event earlier, I think last month, for the launch of the e-Naira. And Nigeria is one of the few countries where the Central Bank of Nigeria has launched a retail CBDC like China. Now, of course, it's very early days and the jury is out on how effective it has been, what have been the kinks, etc. But at a conceptual level, as Hongi mentioned, Professor Yinka, tell us what really has been the driving reason behind Nigeria launching eNaira when so many developed countries have not even gone down that direction, and so many other countries are still at the phase of evaluation. And in your view, as an academic who's knee deep or probably neck deep into this, do you believe that this will significantly impact the landscape in terms of inclusion? If the moment CBDC is launched, is that the silver bullet for the challenge of exclusion?
Okay, thanks, Malik. And you're absolutely correct. Nigeria did launch an eNaira in October this year. And one of the reasons, again, there's several objectives around the eNaira, but one of them is inclusion as well as cross-border transactions as well. On the inclusion side, I think one of the areas when you look at the story of financial inclusion in Africa, there's one use case that resonates is M-Pesa, right? And M-Pesa is a mobile money and a mobile money wallet. But unfortunately, in the Nigerian market, that technology or that system did not quite take hold. And so what we're seeing is that there's still a big gap, and that's because of the trust. There's a trust deficit in our ecosystem that we need to address. So when you think about defunct banks or the whole banking history and the whole stability of the banking ecosystem, there's been a lot of mistrust around banks going down, as well as their access to the deposit insurance and the time it takes to get those processes sorted out. So from an eNaira perspective, one of the things we're hoping to see is that the equivalence of eNaira versus physical Naira should give the users and the community and the ecosystem a bit more trust in the fact that this is fiat currency. And then when you look at the liability aspect of it, the liability lies with the central bank, not with any commercial bank in that sense. So for me, that's the most singular benefit that I see that we can use to drive the narrative around why should we use eNaira versus the physical Naira or a bank account as a deposit Naira in that sense. And once we can tell that story well, build use cases around it, I see the transformational impact that we would get. Thank you.
Thank you. I want to continue a little more on this topic, and then we'll go to our next question, and I'll continue with both of you, Professor Yinka and Professor Chen. So when we saw in the case of China, it really is, different people call it different things. IMF labeled it synthetic CBDC. You can call it two-tier architecture. And Professor Hongi had, he ran a course a while back in which I was one of the participants. There was an excellent discussion on CBDCs in one of the forums on how it's a two-tier architecture, if one were to very simply put it. So on the one hand, you have the digital yuan by the PBOC. So it's like fiat currency in a digital form. But then you have it's called DCEP for a reason. So digital currency and electronic payment. So they also are planning to leverage the digital rails of the Alipays and the WeChat Pays of the world. There's no point ignoring those who have 1 billion users and 1 billion users who are already using it and are comfortable with it. So Professor Yinka, how does this compare or contrast to perhaps the China experience where they are saying, okay, the role of the central bank is monetary policy, guaranteeing systemic stability and ensuring that we have inclusion at scale and even as you said, deposit insurance, etc. So more comfort to users, but we don't need to reinvent the wheel where there is something already working well. Of course, we don't want monopolies, as Professor Chen said. So I want to understand from both of you. We have this China example where the CBDC will kind of be in cooperation with the big two. So they will have Alipay, WeChat Pay, and some banks who will be like the distribution front ends, while they will also promote their own wallet. How does the eNaira compare versus this, and what does it mean specifically from an inclusion standpoint? Since you mentioned again and again that there is an issue of trust, there's a trust deficit in Nigeria, which is not the case in China. Everybody uses and has been using WeChat Pay and Alipay for years now, and in fact, that's become the center of their life, so to speak.
Thanks, Malik. And I think that, you see, everyone's journey is going to be different and based on your level of maturity regarding payment. So China is coming at this from a different direction, and we're coming at this even just from the early days and the beginning days. So what the central bank has done is basically adopted a risk-based approach. And the whole idea is, China has better identity systems. So we're not even going to start doing that comparisonitis around it. So what we're trying to do at this stage is really, there's a 4-tier KYC system. The tier 0 means that for those who have a telephone number that hasn't been validated against the national identity system, so your transaction levels and your daily balance limits are lower. Then we have a tier 1 validated telephone number with the national identity. Then we have a tier 2, which is validated within the banking system, and then a tier 3, which is a full KYC. And what we're trying to say is that, and then we're going to roll out incrementally and use different milestone approaches. So right now, all that's been rolled out is the wallet. And people are about, just come and start and open your wallet. And it's really about the person-to-person, peer-to-peer transactions. At the next stage, then there'll be onboarding of merchants. So we can begin to use that across the merchants' ecosystems. Then another stage will be bringing on the different tiers and also expanding to rural as well as offline. We are using it as, from a design perspective, it's really about solving our own nascent problems, knowing that we don't have the depth of payments that China has. So we're not going to try and say, from day 0, everybody's going to be transacting, but it's a complementary system because we know that adoption will take time. We're also looking at how do we work with financial service providers around building use cases and products and services that solve social and development problems that are native and intuitive to the country. We're also thinking about how does the government use it for social payments, because that's another thing. We're safety net and social investment payments around, rather than moving cash, how do we deploy these wallets and have them access these wallets? So I think everybody's trajectory and journey is going to be different based on where they're coming from. Thank you, Malik.
Thank you. So Professor Chen, is it, as we heard from Professor Yinka, and I kept mentioning it repeatedly, that China already has a very well-functioning, at least payments duopoly. Unfortunately, it's become a duopoly, but it's functional. People use it. People are comfortable with it. So are we going to see a scenario where the digital yuan will serve probably a different set of stakeholders and needs, and Alipay and WeChat Pay will continue to be mainstream payment applications? Or do you foresee that over a period of time, at least that's the central bank's vision, that payments and transactions start moving directly to the central bank?
Right, thank you very much. I think, Malik, you raised a very important question, because when I teach the CBDC or ECNY for many students, one of the key questions most students they raise is, China, you already have very convenient Alipay and WeChat Pay. Why you need the CBDC? I think in addition to monopoly issue we have been discussed just now, that is you can have another observation, that is to see the cash flow and also information flow. So I think if we only work with Alipay or WeChat Pay in the market for the digital payment, the information flow is controlled by WeChat Pay or Alipay. So all the information, all our digital footprint, that will be mostly controlled by Alipay and also WeChat Pay. But by ECNY, the government, they have more awareness about your user behavior. So that comes to another issue about your privacy. So right now, when central bank in China here now, they discuss about the ECNY, they also separate different tier. So if your transaction amount is under a certain number, that you keep like the minimum privacy. So government wouldn't know the detail what you buy, maybe under 100 Chinese yuan. But above that, that will be some of like the money laundering issue. So government still have the control on that. So I think that is also some of the issue maybe we should also bring into the consideration.
Thank you, both of you, and we are having a fascinating discussion on CBDCs, and not just from an inclusion standpoint, but even privacy and other areas. So at what point does the government need to really, kind of step in, get involved? How much does the central bank need to know about your life and your finances to support you in inclusion versus, should they, as Professor Inka said, limit to using these for government disbursements, aid disbursements, etc. We could go on and on, but let me come back and change track a little bit. I'll go to Noha and Mickey now. We've discussed and I will request, yeah, thank you. If those who are not speaking and put themselves on mute. I want to ask Noha and Mickey about the MSME aspect of financial inclusion. I think one of the things we usually end up doing is when we talk about inclusion, we talk about individuals, we talk about the bottom of the pyramid, but in country after country, especially emerging countries, and Nikki briefly alluded to it in the context of the pandemic about how so many people suffered, how so many people lost their jobs, and even business people who did not shift to becoming entrepreneurs, they had no other choice but to go online and go digital because nobody was going to stores or nobody was allowed to go to stores. So in that kind of a scenario, I want to understand the challenge, the gap, and the maybe some interesting solutions on how digital technologies are enabling and solving for not just the credit gap, but the entire value chain from being able to sell to access, merchant or revenue-based or receipt-based credit, etc. And Mickey, Union Digital, obviously, Union Bank in the Philippines is known as a bank which serves and services the MSME segment. It's neither known as a bank of large corporates nor a leader in the retail banking segment. So you guys are in that spot, and that's why I'm asking you this. So tell us from that perspective, how can digital or how are digital solutions really helping MSMEs? And Noha, I want to understand that in the context of Egypt and probably the broader MENA and the North Africa region as well. We can start with you. Okay, Noha, go ahead.
Thank you very much. Okay, thank you very much for the question. I mean, usually the conversation, like you said, focuses on the individuals, and it ignores more or less the impact that including the MSME sector can bring. Financial inclusion is important, not just because it helps individuals and families get out or step out of poverty, but also because it develops communities as a whole, and including MSMEs drives economic growth. And that's the core value that including financially including MSMEs brings in. Why hasn't that happened so far? It's more or less the same imperative. Banks, I'm a banker, so we're not bad people. It's not that we have decided to exclude.
I'm also a banker. There are many bankers here, so we don't need to. It's not self-bashing in any way.
So it's an economic decision. It's just being the correct economic decision. If I have a small segment, a small number of customers, whether those customers are individual high net worth individuals or large corporates that I can serve, and that segment has a profit margin that thick, it's going to cost me less to serve that segment, and their profitability is simply going to be high. And in the absence of technology, and when you're serving those people mainly based on a brick and mortar operating model, it becomes really impossible to actually serve them profitably. And this is why the segment has been excluded. The problem now is that even with that technological advancements and the availability of multiple technologies that act as enablers to reach and servicing those people profitably, the financial industry as a whole still needs the time to understand that segment, to define that segment needs and change how they operate, how they do business, to design financial services that actually meets the needs of those people. We have been
No, I think your screen froze. I don't know whether it's only me or Noha, if you can hear us. Okay, we've lost you. Maybe you can type in the chat box, or if we can't, then we'll come back to you. We'll just wait for another 5-10 seconds if you're back. Okay, unfortunately, I think that there's some connectivity issue. So Noah, if you can hear me, we'll come back to you. Just stay on that thought. We'll come back to you. And Mickey, now I use this time to go back to you. As I said, Union Bank has been known as the bank for MSMEs, and your designation clearly says Chief Innovation Officer. So tell us, how does innovation, and maybe give us some specific tangible examples of how Union Bank and Union Digital are planning to use innovation and innovative technologies to support the MSMEs, especially both in terms of the pain and the challenge, as well as the opportunity post-pandemic.
Yeah, well, Union Bank has a history of going down directly to the community and supporting MSMEs by enabling them through open finance, through open APIs, right? We've embraced fintechs, we've guided them, we've embarked on the journey to create less friction or less barriers to entry and to consume financial products. Hence I2I, which basically connected all the rural banks in the Philippines. As you know, we have 7,100 islands, as mentioned, right? And payments, inter-island payments was a challenge. It would happen 20 days after, 5 days after. Now it can be real time or near real time. And that's how we are enabling the MSMEs, the SMEs, and also these communities, right? Bringing payments closer to home, like closer to real time.
So Mickey, that's on the payments aspect of it, but we keep hearing the statistics so much, and not just in the Philippines or not just in ASEAN, but I guess pretty much in every developing country, that there is a huge hundreds of billions or probably a couple of $1 trillion of credit gap for MSMEs. As Noha said, it's just an economic thing that the banks are not able to service them profitably, but the need for credit is very much there. So where and how does digital technology, and Union Digital is, I think Noha and Yinka both spoke about the brick and mortar business model not really allowing for going to the next tier of customers, but you are a fully digital bank, right? That's how you got a license. There is no brick and mortar structure. Everything is on the app online. So tell us, how do you propose to, and I know you've not launched yet, but from and if you can share, if it's not confidential, from a strategy perspective, how do you plan to support the MSMEs? Noha, welcome back. We had shifted to Mickey because you had frozen. So we'll come back to you. Just hold your thought on that. How is Union Digital or Union Bank solving or planning to solve for the credit gap for MSMEs using innovative technologies? And there are many models out there, but as I said, if you can share perhaps 1 or 2 tangible examples of how it's being applied, then it would be helpful to our audience.
That's a very hard question without divulging our strategy.
So you can pick any benchmark or share whatever you can freely. No worries.
Let me speak in general terms, right? Technology is the great enabler. It allows you to bring down costs. It allows you to act to reach people that were unreachable, right? It also allows you to educate them and give them access to what was not accessible. If I can focus on education I think is a very, very much important tool for financial inclusion, because a lot of these individuals are also afraid of the big banks, right? And I think going down to the community, teaching them, understanding their needs, and helping them with, let's say, bite-sized or microservices that will allow them to uplift their lives.
Thank you, Mickey. So you tried to share without being able to or wanting to share too much, but I appreciate that. Noha, Are you there or we've lost you again? So, talking about the realities of emerging markets, this is one of those challenges where, even the last mile connectivity is an issue. But Noha, if you can't hear us, hold that thought, we'll come back to you. And definitely we want to continue this conversation. Professor Inka, I want to go back to you, and this is something in the context of not just Nigeria, but emerging markets as well. We've been talking a lot about digital being the great enabler. Nikki spoke about it as being the great leveler. And I'm one of those who tries to see things from a balanced, nuanced perspective. I think all of us, we've now spent years, decades in this industry. We've spoken at dozens and perhaps hundreds of conferences. We've interacted with all manners of people. So we do try and see a 360-degree picture. I want to understand, is digital really as much of a savior as we are making out to be here? And we understand it. I mean, there's no doubt about it, especially during the pandemic. We all saw it that, in fact, the economy existed and was able to survive only because of digital, whether it was in terms of small sellers being able to sell online, or food delivery restaurants moving to online deliveries, or cloud kitchens, or even digital payments. But on a more sustainable basis, do you have this worry that digital, on the one hand, is enabling the smaller sellers, MSMEs, or the people at the bottom of the pyramid, but it's also creating a greater divide between digital haves and have-nots? So now we are really saying that the whole premise is built on digital technologies and digital access, and as we are seeing right here, it's still not as not everybody has 5G. Perhaps not everybody can be a Korea or a Japan, or have a Huawei in China, which will take it there. Everybody has, there are many parts of the world where basic connectivity is still a challenge, and Nigeria perhaps is one of them. So tell us again, from a rigorous academic and a social observer and an expert perspective. You also sit on the board of GIFT, and you're on the advisory board of GIFT and APIX, etc. Do you have this worry about digital increasing the divide? And Noha, if you are back and if you can hear us, while we go back to the earlier question, I want to get your perspective on this as well. Are you at times concerned that we are moving to an era where we're actually increasing the gap between the digital haves and the have-nots?
Okay, I think that let's look at this from two dimensions, or two perspectives: the supply side and the demand side. And I'll start with the demand side. On the demand side, Africa is a mobile-first market, right? And when we say mobile-first, because we did not we did not get through that micro computing era of putting computers in everybody's home. So we're predominantly that mobile-first market. So when we talk about digital first, I think it's really going back to, we know that I think the number I had is about 70% SIM registrations across the continent, right? And I know that there are duplications across there. So we have the devices and we have the tools. Now, the next stage is, they're not all smart devices. So how do we build products and services that are fit for purpose to the needs of the users in general? So that's why when you look at an M-Pesa or what's going on in other African markets, it's not about smartphones. It's really about other protocols that sit on the basic telecom service, like USSD or even SMS as a protocol, because those are more accessible, because data subscriptions are still not as widely, are still not as large as we expect them to. So I think that it's about matching the product and the market needs and building services across the different spheres. So we've seen innovative ventures come up. So during the COVID-19 lockdown, we saw some of the fintechs actually going into and setting up marketplaces, very quick marketplaces with integrated payments. So you don't have to sort of start a whole business on a computer. You can actually use your phone and get your payments, because that's really the information flows and the physical and the financial flows are taken care of. And then we saw, again, not everything has to be around a platform. We also saw very nuanced and basic systems just using WhatsApp or text messages, right? We're informal wet goods sellers in the market. We're texting customers or people and saying, I have these products available, I can deliver it or send it to your area. So again, these are frugal innovations that are coming around from what we have rather than what we desire to see in the future. And I honestly believe that the digital divide will continue to grow, but we also need to be mindful that we can define that divide based on accepting and acknowledging who we're trying to serve and the resources that we have available. Thank you.
Thank you. That's an interesting perspective, that while the digital divide is a real issue, human ingenuity has ways of, if not overcoming it, then certainly circumventing it. Noha, what's your view on this?
Well, it's whenever we are tackling the subject, the topic of social divide, when we look at offering financial services to the bottom of the pyramid, we need to make one differentiation just to keep the conversation relevant. You have unbanked population in every country around our region and similar markets. There are two segments within the unbanked populations. There is the bankable unbanked population, and there is the unbankable unbanked population. Regardless of the technological advancements, the emergence of digital financial services and the offering, those are not going to change much of the financial inclusion amongst the non-bankable unbanked, because there is an element of capacity building that is needed in there. Those people do not have the capacity, that they do not have money to put in accounts or to transfer or to save or to invest. The opportunity lies within the bankable unbanked, which mainly is the gray economy that we have in there, whether amongst the individuals or amongst the small business. So that's one perspective that we need to always keep in mind when approaching this and discussing that. That opens the door to the concept of blended finance. We need to bring the philanthropic money, the development finance with the for-profit finance to serve financial inclusion. We need to do this. This is urgent. This is pressing. With the absence, if we cannot bring blended finance to action to serve financial inclusion, there is no hope for the unbanked who are absolutely unbankable. Thank you.
Thank you. That's actually a very interesting perspective, and I want to use that as a segue to the next important topic, which I want to cover, which is on financial inclusion along with sustainability. And I think over the last few weeks, especially, we've seen a lot of activity. We've seen the COP26 global discussion, some outcomes, some disappointments, but at a more structural level, we've seen how ESG has become more and more important, and in some cases even embedded into investment decisions. Whether you look at Moody's, etc., they are all coming up with scales, etc. On the other hand, it's also a commonplace understanding, and perhaps there are some studies which have documented this as well, that climate change impacts the poor and the developing countries the most, as we've seen in the case of the pandemic. Any natural disaster is not, it may seem like fair, but unfortunately, even over there, even that is unfair. It hits the the developing countries the most. So I want to ask this question to Noha and to Professor Hongi. How do you see the two being correlated? And since you spoke about philanthropic money coming in, blended finance, can blended finance be an approach for solving for inclusion while ensuring alignment to green and sustainable finance? Noha, you can start, and then we'll go to Professor Hongi as well.
Thank you very much. Fintech and green tech in general is the answer to where we currently are. I'm not going to tackle the presence of climate-related investments because it is there. Do we have the channels and the structures on the ground that supports the flow of climate finance into regions like Africa and other parts of the developing world fairly? The answer is no. So this is where we actually need to focus. One of the enablers that can support the flow of climate finance into regions like Africa and other parts of the developing world is tech, startups in general. We can call them green tech, but startups are more inclusive naturally. They have the ability to they I wouldn't say that they care more about people, but they do, because unless they do that, they stand no chance to actually compete against the incumbents with the money and access to resources and the like. So they become customer centric because that is the way to actually succeed and continue to be in business. Tech startups can achieve social inclusion, can reach everybody with basic services. On top of that, you can build a layer of financial services that can tackle the financial exclusion point. Green tech can support with improving livelihood of people, of individuals, of families. If you are looking into access to energy, for example, the majority of a lot of parts of Africa and other parts of the developing world, they're off the grid. They do not have access to energy, let alone clean energy. So clean energy can and will be offered by green tech startups who can actually reach those people, build value propositions that are that attend to certain needs for societies and communities that are off the grid. The reach can be tackled by agri-tech solutions. Agri-tech can support smaller farmers that were never part, again, off the radar of the larger service providers and companies. Using technology can improve the resilience of smaller farmers, and you cannot just there is an entanglement between green finance, green technology, and fintech being at the heart of that, because the financial industry is part of everybody's life, and we definitely can use fintechs to channel that green finance into businesses that can have a positive impact on the climate change in general. We see technological apps working on reducing how many cars stay in traffic for longer, the hailing apps that can actually be used to reduce the number of cars on the street, clean energy, we've touched based on that, agri-tech, we've touched based on that. It's going to be part of our life very, very soon, but we need to build the right infrastructure to build that pipeline of those green tech startups that can offer those services, and then to build also the vehicles, the venture capital funds that can channel that money into those businesses quickly. Because if we look at the status quo, it takes like a year or sometimes more for a development organization to do their due diligence in order to release money into a certain investment. And we really do not have the time in there. If we do not start today, in 10, 15 years time, Africa is not going to be amongst the least polluters of the air. They're going to develop, and unfortunately develop in the wrong direction if climate finance doesn't actually flow into green tech solutions and fintechs that can finance the green tech solutions that are there.
Thank you, Noha. Some interesting examples. Professor Hongi, we have, we are running a little behind time, so maybe if you can quickly share your perspectives in 1 or 2 minutes on are we going to see this continued convergence between fintech, sustainable finance, and inclusive finance seamlessly converging going forward as well?
Right, sure, certainly. Maybe I can pick up an example regarding the insurtech. So I think as we see that the climate change or climate crisis is happening, I think in the last 10 or 20 years, and I think the speed is also accelerated. But in the insurance industry, when we think about, imagine if you are a farmer, and maybe when you cultivate, you worry about the climate. But nowadays, that the insurtech company they can integrate the technology of the satellite. So traditionally, if you are a farmer, you buy the insurance product, and when you want to claim, you need to maybe contact the insurance company or claim for your compensation. But nowadays, thanks to the technology, they can leverage the satellite and use the smart contract. So when they can see from the satellite when your land that the planet is not growing well, they will automatically detect and use the data they collect from the satellite and by the smart contract mechanism and automatically make the transaction and to pay you the compensation in real time. So I think that is something how technology can help to achieve the sustainable goals. I think I just want to pick up that example to give the audience a bit of sense on that issue.
Thank you, Professor Chen. Both of you gave some very interesting examples, so it's great that it was brought to life. Nikki, we lost you, I think. So I was going to ask you the last question, but unfortunately, it seems we've lost you. So we've come to the end of our panel. Okay, Nikki, you are back. If you can hear us quickly in maybe 30 seconds to 1 minute, I want to close with you. I cannot complete a discussion on financial inclusion without talking about policy. So tell us, in your view, how important policies and regulations are for driving financial inclusion, and maybe if you can give just one example of how the central bank in the Philippines has enabled, a bank, a virtual bank like yours, for driving financial inclusion. Maybe if you can wrap it up in 1 to 1.5 minutes, please. Thank you. Nikki, can you hear us? You frozen. Okay. Okay, go ahead. You got my question?
Could you repeat the question because I lost you?
Okay, my question is, what in your view is the role of policy and regulation in driving financial inclusion? And if you can give one example, specific example of how progressive policies have enabled financial inclusion through digital technologies in the Philippines. And we'll conclude there. Nikki, we are losing you. So if you want, you can try switch off your camera and talk. Otherwise,
hello.
Yeah, you're coming in and out. So Nikki, do you want to try switching off your camera and speaking if that saves some bandwidth?
Let me switch off. 1 second. Can you hear me clearly now, or am I still talking?
Not too clearly, but please try. Otherwise, we'll have to conclude the panel.
Sure. Let me try to answer your question quickly. So policy to me is really like a parent. Hello?
Go ahead, please, Mickey. Go ahead, please.
Okay. Yeah, so policy is really like a parent. It's really there to nurture, guide, and enable all types of financial institutions to properly serve the underserved and underbanked, right? Here in the Philippines, the Philippine Central Bank released an open finance framework, which one, encourages competition, two, foster innovation, financial inclusion, and 4, it gives consumers control over their data. Hello?
Go ahead, Mickey. No, it seems we're losing you, Mickey. So I'll try and
hear me.
No, unfortunately, you're coming in and out. So I think we'll just end the panel here because we've exceeded our time slightly as well. But I kind of could hear the point you made about open finance being one of the key enablers for driving inclusion. I think that's a great way to end our panel discussion. We've covered a lot of topics today. We'll hopefully regroup and have a chance to meet again in the new year and take the discussions forward in the context of open finance, sustainable finance, etc. But with that, we come to the end of our discussion today. A great discussion, excellent perspectives from different regions, different countries, great examples. So I want to express my heartfelt thanks to all the panelists here, Professor Hungi, Mickey, Professor Yinka, and Noha. Thank you for sharing. And I hope to see you again in the New Year's on a panel together. Until then, have a wonderful New Year. Happy holidays. Over to you, Idris and the BAM team.
Thank you very much, Malik. And thank you very much, all panelists.
Thank you all. Bye.
Okay, bye.
Thank you.
Have
Bye-bye.
a nice day.
As we come to the end of the panel, Idris and the organizers, Al-Mashura team, over to you. Do you want us to stay or shall we end the panel?
Please end the panel. There will be a small short video at the end. Thank you.
Okay, thank you.